Now friends, come to this particular question number 2. Okay, now this is Mr. Bhargav, age 73, visits India every year for 50 days and however it does not disclose his citizenship to anyone. So now actually citizenship non-disclosure sometimes matters in the residential status determination, but he is coming to India only for 50 days. So this is very much clear that his residential status is going to become non-resident. Okay, so he is a non-resident, what should I say, investor into the REITs, and accordingly the rate of tax from the TDS point of view can little bit differ. Okay, because the TDS provisions for resident, non-resident, different rates is already explained to you some time back. Okay, at the same point in time, the tax rates like higher basic exemption and all that to non-resident cannot be available, although he is a senior citizen. Now see, incomes 1023, ideally FCA income which is exempt in the hands of the business trust will become taxable in the hands of the unit holder. So this is a question directly for the unit holder. The business trust we don't have to do any computation. Okay, so 1023 FC. Okay, let me scroll the provisions. Okay, see 1023 FC, interest, dividend. A is interest, B is dividend from special purpose vehicle. First of all, so let's see 1023 FC, interest income from REIT, dividend. Okay, so these three incomes are 1023 FC, interest is A, this is B and this is B. Okay, so ideally it should be taxable. Ideally it should be taxable in the hands of the unit holder because it is covered by exemption in the hands of the business trust. Okay, then rental income from estate owned by REIT, that is FCA provision. Okay, that is a FCA provision. Income which is in nature of rent out of the property directly owned by the business trust. Okay, so this is very much clear now. Okay, so that way ideally all the four should be subject matter of taxation in the hands of the unit holder. But if you see here, A Limited, B Limited, Indian company having a controlling interest, so it is okay. One of the conditions satisfied, it's 100% shareholding in AB Limited. Now B Limited has opted for special rate of tax under 115BA. This is something catchy. Okay, so if it has opted, the B Limited has already opted for the special rate of tax under 115BA provisions. Okay, only then it will be subject matter of taxation in hands of the unit holder. Okay, otherwise in the hands of the unit holder it will not be chargeable to tax, and that is, first of all, see, that is with respect to B income, that is dividend income. Okay, and B Limited has opted for special rate of tax. So B Limited has opted, so this is the amount. Okay, so since it has opted for a special rate of tax, it will be taxable in the hands of the unit holder. Okay, however, dividend from A Limited, where A Limited is not specifically mentioned that it has opted for a special rate of tax, these will not be taxable. These will not be taxable in the hands of the unit holder. As simple as that. Okay, and thereafter is a non-resident, so appropriately you have to multiply the rate of tax, and TDS obligation also you have to discuss, but that TDS, he is a non-resident, so I already told you, see here, non-resident TDS also, rate and all that I will specify. See, LBA provisions, non-resident, if FC type income, then the rate is 5%. Okay, and FCA income, that is basically your rental incomes at the rates in force. That means basically as per the TDS table, and there the rates in force is going to be the highest rate applicable in the, his individual, to highest rate is applicable in the slab system. That will be your applicable rate. Okay, and accordingly TDS provisions will be applicable.